G7 nations are drafting a plan to ease the economic impact of the COVID-19 outbreak. Finance ministers and central bank chiefs from around the world are holding a conference call tonight to discuss their response to the epidemic. And they're expected to pledge to work together to ease the financial impact. But the plan is reportedly short on details. Governments have been scrambling to respond to the outbreak. Futures markets are speculating that the U.S. Fed Reserve will lead a round of global monetary easing. Financial officials in Europe have moved to calm fears about a damaging economic downturn.
It is time today to declare that EU is ready to use all the available policy options, if and when needed, to safeguard our growth against these downside risks. This is time for solidarity. It is time to build confidence. It is time to act.
And more on the G7's plans now. We're joined by Jamus Lim, and he's an economist with Thirdrock Group. So, Jamus, this teleconference is quite unprecedented. What are you hoping? What's the financial world expecting from these talks?
So we should be clear, the notion of international monetary cooperation is not entirely unprecedented. We saw it in the 1980s all the time with the Plaza and the Louvre Accords. And then more recently, in the 2009 crisis, there was concerted cuts across central banks. And I think that's what we expect this time around as well. So concerted cuts led mainly by the United States. And in fact, markets are already pricing this in. So they're pricing a virtual certainty of a rate cut coming in the Fed meeting in 2 weeks, and then subsequent cuts for the rest of the year for a full percentage point by the end of 2020.
Okay, so how crucial is it at this point to have coordinated policies to tackle the economic fallout from COVID-19? You know, what would this concerted response look like? You mentioned these concerted cuts.
So the key to keep in mind why these cuts are so critical at this time is because even prior to the COVID shock, the world economy was already in a process of slowdown. And what we saw in November and December of last year was a slight pickup. So a little bit of a sense that maybe a bottom may have been reached. And what we see now is that because of the impact of COVID-19, a lot of those hard-won gains are now threatened. And what this effort is by the G7 central banks is an effort to try to shore up global confidence, especially from the demand side of the story.
So Australia's central bank slashed interest rates to a record low over the fears of the outbreak that would push the country into recession. Now, we know that Malaysia also followed suit. Do you see other central banks treading the same way as well?
You're going to see quite a bit of heterogeneity between countries. And part of the reason why we see such decisive action by countries such as Australia or Malaysia, for example, especially Australia, is that, well, firstly, these are commodity exporting countries. So they have already faced a soft patch that comes from reduced demand. And then for Australia in particular, with strong trading relationships with China, they're going to be doubly hit by a demand shock that comes from external shores. But, you know, the extent to which different central banks can actually respond in a credible way really depends on how much room they have. So if you look at the European Central Bank, for example, they really don't have very much room to cut interest rates, in contrast to other central banks that may have actually more room to do so.
All right, you know, mentioning Australia, it has quite a large exposure to China. So how effective are these stimulus measures going to be against this economic disruption, though?
Now, the key is, you know, of course, every economist is pricing in the notion that the COVID shock is something that will lead to disruptions in supply chains. And in a sense, to some degree, some of these factories restarting will also mean a relief in some of these supply-side shocks. But what is really an open question for us now is what's going to happen on the demand side. So as you know, governments are imposing fairly stringent measures for people to stay at home. This is undoubtedly going to dampen demand. And if you recall, the consumer had been one of the few bright sparks in the economy up to now. And so this is the big concern, that without the support of the consumer, we will actually slide closer and closer to a stage where the world faces full-on the possibility of a recession.
All right, you mentioned there about these normalizing the supply chains. So China saying that it's going to be normalizing soon. However, the global spike of COVID-19 is now higher outside of China.
So I don't want to be an epidemiologist, and I don't know how all this will eventually come around into some kind of massive feedback loop. But I think what is nice in terms of how China is making progress is that, of course, as you know, China is the second largest economy in the world and a crucial component of these supply chains. So the fact that China is able to get people back into factories, able to restart some of their production, that would mean that at least part of the impact of a contraction in the first quarter will be mitigated. And the hope is that by the second quarter, things will be going back into fuller swing and economics will normalize.
Speaking of global recession, the OECD has said that the outbreak could actually plunge global growth to its lowest level since the 2009 financial crisis. Do you agree with that assessment?
Yeah, I don't want to be too cavalier about this. So it's certainly the case that there is a risk. But, the global financial crisis was something that affected the financial sector, which is a very crucial component of real economic activity. What we see now, of course, is something entirely different affecting demand. And until we have a clearer understanding of how consumers will actually respond to this, not just in this month or the next month, but in the rest of the months ahead as the situation plays itself out, that will actually tell us whether this will be as big a threat as the global financial crisis. On our part, we are a little bit more sanguine, and while we do think that there will be a hit, our baseline case is not that we will actually enter into an outright global recession.
All right, thanks for sharing your insights. Jamus, we've been speaking with Jamus Lim, economist at Thirdrock Group.